Tesla will have sort of a ChatGPT moment.
Elon is 3 to 4 years ahead of the competition.
Suddenly, 3 million cars will be able to drive themselves with no one.
Did you say a $2,000 price target?
It's Tesla's world. Everyone else paying rent.
That is what we're saying.
Cybertruck's going to be huge. An over $5 trillion market cap. This rally has more room to run.
The Model Y is now the #1 selling vehicle in California by a wide margin.
The IRA credit just went into effect, $7,500. The EV credit goes from being a tax credit this year to an instant rebate next year. That kicks into play January 1st of 2024.
All right, yeah. So let's jump into these catalysts, right? These catalysts that actually are going to take Tesla to all-time highs. Just if you're a beginner, if you're new, not sure of why Tesla might go that high, then stay tuned. So we are going to dive into that. Here we go. Make sure that we got this set clear. Okay, good. All right, so Tesla 2023 headed in. I think we go to all-time highs this year, but you know, given if the macro aligns right now, I think it is starting to align. But first, let's start with some context right now. Tesla Model Y was in Q1 of 2023. It was the best-selling car in the world, right? Not just California, but the best-selling car in the world. So you know there's demand there, right? Next, you have all Toyota cars when it comes to the world. But the Model Y, best selling car in the world, there's no denying that, right? That is credibility right there for the Tesla model in general. Now, when you look at the average car in the US, the average is cost of a car is $47,000, right? That Model 3 is down to about $30K. Yes, it is the first, you know, the first model, so it's not like an advanced version, but you do have an EV, the best EV on the market, at $30K, right? At $30K. So it is now below, and prices will continue to fall for Tesla because the cost to produce it continues to fall, given by Moore's law, right? So we know that's coming into play. California is already making that transition, right? Zero emissions by 2020, by 2035 for California. No more gas vehicles. So California is on their way. They're obviously innovating a lot faster than the rest of the U.S., but we will catch up for the rest of the U.S. Europe's doing it. China's doing it. So here we go. Now, this is just an anecdote, right? You could find different information here, but the cost to go 100 miles for a EV was $3, right? To charge, right? The cost to charge, yes, it might take a little longer than filling up your gas tank, but that's going to come down. So $3 to go 100 miles versus $22 to go 100 miles. I mean, that's enough evidence right there, right? Tesla insurance, right? A lot of people don't know about this. The insurance industry is over $1 trillion. Doesn't mean Tesla's going to take the whole thing, but here's another revenue stream, right? And if you look at the annual premiums, much cheaper than State Farm, USAA, Nationwide. Average cost is around what, $3,900 right here. And these costs, when we do get full self-driving into the future, will be lower. So insurance set to create another revenue stream there. Now let's look at the fundamentals. This tax credit is going to be big, mostly in the next 6 months, right? Fiscal policy, government spending is given incentives for, Inflation Reduction Act. And one of those incentives is a $7,500 rebate in 2024. So that, I believe, is going to drive the stock higher. Also, there's just a lot of catalysts here to launch this price a lot higher. Now let's jump into the fundamentals, right? Other than just, okay, this looks like a good business. The growth rate right now, this is 08 to 2022. Tesla is growing revenue annually at a 50% growth rate. No one's even close to that. That's this large of a company, right? So 50% growth rate in comparison. Toyota's like, I think Toyota's their best competition is less than 10% annual growth rate, right? A lot lower. So Tesla is still in growth mode, and this is this is up until 08. Or I'm sorry, 2022, right? Now we'll go into the 2023 data too, because there's something very interesting there. Units per quarter. So if you go to Q2, you can see the units, right? The production, their ability to produce, which is going to transfer to revenue as they deliver these vehicles. If you can't produce enough vehicles, then you can't deliver, therefore you don't get no revenue. So you can see the exponential trend moving higher. And this stall right here was from the pandemic, right? Everything shut down. Still, Tesla came back with a lot of production, right? Now, Tesla also the number one, the fastest company to hit 100 billion. They did that this year, fastest company to hit $100 billion in revenue. Next was Amazon. Costco. It took Amazon 21 years. It took Costco 28 years. It took Home Depot 39 years, and etc. Right? You can see the rest of that. It took Tesla 20 years to get $100 billion in revenue, fastest company in history. All right. Now, when it comes to profit margins, I know we're going to talk about margins, but when it comes to profit margins, they do have the number one for EVs anyway. They do have the number one profit margins for all the EVs, right? Next, you have GM, BYD, Toyota, Volkswagen, and the rest of them, kind of fall apart from there. But best profit margins on the market. Now, if you look at the services, right? If we're talking services, the service business, that revenue is starting to turn positive here in going into not Q3, but going into 2023. So what's that going to do for gross margins? This increases the gross margins. That in the whole, a lot of the analysts are like, well, gross margins are kind of low, but the way the market works is if they see the gross margins are starting to pick up, which is happening, then you do get a bid from Wall Street. And I think that's what we see going into the fourth quarter, going into the third and fourth quarter of earnings as the overall market also picks up. So those margins should be improving there. Services are starting to pick up. Now, the catalyst, right now to the catalyst, what we're here for, Cybertruck. We should be getting Cybertruck somewhere between September and October, right? The release. Maybe it doesn't happen, maybe it does, but this is a huge catalyst. There's already over 1 million pre-orders. And the last time we saw Cybertruck, or we saw a new model come out, which was Model Y in 2019, 2020, before the car even hit, what happened? The price accelerated, right? The technicals, which we'll look at later, the technicals accelerated. Tesla went from, back before it pre-split, Tesla was around I think it was around 250, and it moved up to around 900 going into that ramp, going into Model Y release. So, and usually, again, catalysts move the price of the stock price before they actually come out. Once they actually come out, usually all the excitement's already in. So Cybertruck coming online Q3, somewhere September, October. That's another huge catalyst. Now, joining the Tesla standard, the supercharger network, now we know Ford, GM, Mercedes, Rivian, Nissan, Hyundai, Honda, Acura, and there's others too, Polestar. They're all going to join this supercharger network, which becomes sort of another revenue stream for Tesla, establishing their claws into the market of electric vehicles, right? And there's going to be more tax credits from the government to establish that. Why? Because Inflation Reduction Act, the government in general is going to spend money to lower inflation. Whether that really happens or not, they're still getting the stimulus towards these businesses, right? So also, Tesla is the world's largest energy storage system supplier as of Q1 in 2023, right? And this is following over BYD in China, right? And remember, Elon said that, what is it that Elon said? Elon said that the energy storage business, this is what ARK Invest, this is what Kathy Wood is so bullish on also going into the future. The energy storage business, Elon says, will be 100 times bigger than the actual EV business, right? Current margins are 18%. Those should expand going forward. They also have AI with that to sell back to the grid. Texas already adopted two of their energy storage networks, you could call them, and are using those right now. So that's going to also increase going forward into the government. If you guys do have questions, go ahead and put them on the YouTube, a link in the bio, so I can see them so they don't get lost over here in the Tesla needs to break 260. Yeah, so they don't get lost over here in the TikTok feed. Right, next. Energy storage deployment. So you can see that it's not just, energy, they're deploying more and more of these energy storage units or units in general, right? So the more units, the more potential for revenue, and that continues to grow. The business is growing outside of the EV business right now. Right now, the fastest growing economy in the world is India, right? They have like no debt. They have their average population is like 35 years old, right? They're growing at the fastest rate. They have now surpassed China as the most people in the world. And Elon is trying to establish business in India, right? So expanding worldwide. And we already have Tesla networks in Europe and in China, in Mexico, right? In Canada. So this is going to continue to expand, only gaining more market share, whether it's the energy storage business or the electric vehicle business, right? So are we there yet? No, not exactly, but we'll see how India responds to the new technology, right? Going forward, if they're going to need that to grow their economy, or at least to establish some type of exchange in value between India and Tesla. Okay. Now, this is probably the biggest catalyst in the next 6 months, right? In 6 months to a year, we never know if it's going to come out. Dojo is the supercomputer of Tesla. They have a new supercomputer. They've had it for a while, right? And there's a potential of licensing that supercomputer Dojo when full self-driving comes online. The thing is, full self-driving isn't here yet. So is it really priced in the stock? No, not at all, right? And this is going to really expand margins and create a lot more revenue if that is the case. So you have these data centers being built, right? You have Tesla building their own chips in-house away from NVIDIA, right? So they're not going to be relying on NVIDIA for that. Their chips are more advanced than NVIDIA chips, actually. And they just have these big data centers, right? And why is this important? Because if they license Autopilot and they create a taxi fleet, right? FSD licensing, then they are going to, I mean, nobody's even close, right? No one's even close to this. It's a service, full self-driving taxi. Now, this is looking far into the future. You really got to believe here, but the potential catalyst for that coming online, sooner than later, I think it's coming online pretty soon, right? Elon did mention, and he does say things, but he did mention the potential for, or not the potential, he did mention that somebody's interested. One of these OEMs, one of these traditional legacy systems that are creating EVs are interested in getting in on full self-driving, right? Licensing, because they have all the data. Here's the data, right? They have the most data. They have billions of bits of data. No one's even close. Waymo's not even close. And so you can see an exponential trend in the data, a collection of data. We know data is the new oil, right? The more data you have, the more you can feed your AI system, right? So they have the most advanced chips. The AI, this is the most advanced AI, by the way, right? We look at ChatGPT, we look at all these other AIs. Well, how about a car that drives itself, right? And it is getting better, right? It is improving. There's more, there's new versions of FSD coming out every quarter. And so how close are we to a huge catalyst? I mean, I'm sorry, how close are we to that being realized, or at least, Wall Street turning and saying, oh my goodness, okay, this thing is really online. The regulators are starting to pass it. Let's go, right? Humanoid robot. This is not anytime soon, but they are building a humanoid robot. And what this really speaks to is they are building robotics in-house to help with the production, right? To help with productivity. So yeah, humans can only work so long, but if they're creating robots to actually build these cars even faster, cheaper, then margins improve, more revenue, better system, and there's a whole lot of potential there, right? Now, Wall Street. Why is Wall Street so bearish? Because of the price cuts. But I'm going to show you how this is not bearish, right? Start of the year. Let's go to the Model S. This is the sexy Model S, the sports car, super fast, right? Goes with 0 to 60 in 3.1 seconds. The better version's like 2.9, and it has like 400 miles, whatever, right? Well, start of the year, $100,000. The vehicle is $100,000, right? Jump till September with the tax credit, with the price cut 75. Oh my God, their margins are going lower. But here's what people don't understand. Yes, it's cheaper, but what does that do? That creates more demand, right? People don't want to believe this. That creates massive demand. It's cheaper. Who else is going to keep up with them? They're going to operate at a loss. Not only that, they can push this down, the prices down, because their unit costs are getting cheaper at the same time, right? So as the unit, they're not really losing money. They're making a strategic play here. This is a strategic play, and they don't even do marketing, right? What happens when they start investing in marketing? Model Y, best-selling car in the market. They don't even market it, right? They don't spend on that. So point being here, these price cuts will eventually translate to more revenue, which, hey, your margins might not be as pumped if you keep the price up, but you bring in more revenue, more profit at the end of the day because of that. And if they ever need to increase the prices, which they will when the Fed cuts rates at some point in 2024, 2025, who knows, then boom, margins automatically start to expand again. And you have this elastic demand where it just keeps growing because we all know we're headed for electric vehicles anyway. So yes, margins are bottoming, right? So all these catalysts, now we're going to switch over to the actual technical charts, right? All these catalysts, the biggest catalyst you're looking out for just in general is deliveries, right? We get deliveries, I believe it either the end of September, October. Let me see. Usually it's about a month before we should be getting deliveries. Those deliveries are going to be higher, possibly because of the price cuts. It's going to stimulate more demand, right? People want cheaper Teslas. So that's going to be revenue. That's your revenue grower right there, is going to be the is the deliveries. Margins, we're looking at margins. Will the margins improve? Maybe they're flat this quarter, but they are bottoming. And that's what the market wants to see, bottoming margins, right? Full self-driving, that's going to be a huge one. And then and then their free cash flow. Can they hold the free cash flow? Can they keep up with that free cash flow in general? Okay. So let's switch to the technicals, because this is where, right? This is where you see the price action in the past for Tesla. Take off this. And I'm going to put myself down here, and I'm going to get to your guys' questions also. Expand this. Yeah, so let's do a little deep dive into the actual technicals. Energy storage is going to be massive. Anybody else doing energy storage? Probably, but not at the same scale as Tesla. Tesla needs to break 260. What else we got here? Friday was bearish. Stock is about profits. Any news? Bull. How you see Tesla tomorrow, bull or bear? Tesla tomorrow, I'm not really too concerned with. And I'll go over the overall market. So here's the thing. All these catalysts are starting to align. So let's jump to the technicals here. This is sort of my expertise. This is my expertise right here, right? Nobody is aligning the technicals, the fundamentals, and the macro at the same time, right? That's what I do best. Pretty confident about that. And here's what I see, right? You don't really see this chart very much where, and if you're on, you can see this if you're on YouTube, you can see the charts. We're going to do the technicals here. So this is the long-term outlook on Tesla, okay? These are the moving averages. So this red indicator is the ISM manufacturing index, right? Tesla is a manufacturing company regardless. The manufacturing index is a proxy. This is where the wind blows. What direction is it blowing? Well, the wind is starting to slow down, meaning that manufacturing in the US is starting to pick back up. It is starting to bottom. It is still in contraction territory, but the ISM manufacturing cycle is the business cycle, right? When it turns up, that's when you now know your collateral is not at risk. The US economy is starting to expand. And this is a big indicator to the business cycle. This is when things start to turn up. So it's near the bottom while Tesla's climbing higher, right? The last time we hit the bottom, yes, this was the pandemic, but you can see here, back in, let's zoom in here a little more. You can see here back when this is really good convergence here. The ISM bottomed, okay? Manufacturing bottomed here in what was this, 2020, but this is when Model Y started to come out, right? This is when Model Y, first Tesla turned a profit, price went higher. You had Model Y come out, the ISM bottomed, and it went much higher. If you take out the pandemic, then price probably we would be a little higher than that. So this was the pandemic. This kind of messed things up. But the point here being is you can see clearly that Tesla aligns with the business cycle. If I go to the monthly chart, the weekly chart, it's probably a little more evident there. But the ISM, obviously charts go up and down. You can see the price in the ISM, survey, or the ISM manufacturing index go one for one. Not literally one for one, but they do have a cycle. There's a cyclicality to it, okay? And Tesla is a consumer cyclical company, right? It's a discretionary. It's not a need. So now this cycle's turning up. So you can see the price aligning with that. And now what we're getting is you can see that the ISM turned down, right? Tesla, sold off. They're not one for one. But now we're starting to bottom here. And Tesla bottomed way before that because prices always bottom before the economy bottoms, right? So the ISM turning up is a big bullish signal from a cyclical point of view, because investors, market participants, and banks, money markets, market makers get more confident about where the market is headed, right? So that is that one indicator. Now, if we were to just look at the straight technicals, we are bouncing off of the anchored VWAP, right? So go to the daily chart real quick. And the anchored VWAP, what it is I'll take off these SMAs. Anchored VWAP is VWAP, it's volume weighted price. And I'm taking it from that last earnings, right? The biggest volume spike we got was in January. So the first part of the year, we got a big volume spike because, price sold off a lot, but those price cuts started to slow down. They started to increase their prices, pretty good earnings there, and price was very suppressed. So I'm taking that VWAP from there and saying, okay, on a technical basis, where are people coming in? right? And we're still holding the anchored VWAP. We could come back and retest it around 210, 215, right? That you got a strong support there, but anchored VWAP is still in place. Now, if we turn on the simple moving averages on the daily chart, okay, and then sort of remove anchored VWAP, okay, what do we have? We have price holding the 100 daily moving average. We did get rejected by the 50-day, but what happens when the 50-day, we get back above it, the trend is back in place. Now, I don't even think Tesla respects the moving averages as much as the overall market. I think it's more trend based, right? So when I remove these, you can see clearly that Tesla is just in an uptrend, right? This is what we're looking at. We're looking at a pure uptrend, right? Uptrend, you got a bottom here, and we're pulling back into that. So the trend is in place, and you have earnings coming in October. And if Cybertruck comes out, revenue's already going up. But if you have Cybertruck coming out, you have all these catalysts that sets up for a nice price action. I think we go to all-time highs this year. I still think we go this year if the overall market can continue to keep up the way it's going. Now, another catalyst here that is the reverse repo facility. This is money that's leaving the Federal Reserve. Okay. When it comes down, it's going into the Fed. When it goes up, it's leaving the Fed. So we just had a big rip higher in this reverse repo money, and that money is coming to risk assets. So my expectation after seeing this big move, right? And this is pretty one for one for Tesla. Look at this. This is pretty insane. If we zoom in here, you can see how close of a correlation it is, right? You see that money market fund or Federal Reserve money come into the market, and this is going to bring risk assets higher. This is why I think NASDAQ over the next couple of weeks goes higher. Not only that, but overall earnings for the market are up. Okay, S&P earnings are being revised higher. They're positive for the first time in 2 years, and earnings in general are just positive, right? And you're getting the Fed coming closer to the pause, the end of the rate hiking cycle. Inflation might be a little sticky right now, but overall, year over year, inflation is coming down, right? The trend is lower, and you're getting that happen. You're getting global liquidity come into the market. China is now stimulating. They have no choice. Their global, their market, China's market, they're stimulating. They're cutting rates, and they're increasing liquidity into the capital market to get their property, because who was it? Country Gardens, their biggest property markets. Real estate is a third of their whole economy. So you got Country Gardens, and you have who was Evergrande, who collapsed pretty much, and they're now pumping those markets again. They're giving incentives for real estate again. Well, who's in China? It is Tesla's in China, right? So you're going to get some of that demand come into the price of Tesla, or at least go into the fundamentals. And I think Tesla definitely goes higher based off all those catalysts, and based off how the technicals are starting to align. Now, the last earnings, we did come in to about 298, right? Once we get above that, this is a this is why, if we do get above that level, which I think we do, look how this is a major resistance. This is why I think we squeeze much higher once we get above this level. What's going to take us there? Well, we just went through all the catalysts, right? Cybertruck coming online. Full self-driving for sure is going to take us there. That takes us to all-time highs. I have no doubt about that. I really don't. But from 300 to 315 is the major resistance that we're looking at, right? Before we rip back to all-time highs. So 315, 420 is just a funny number, right? He said this back in 2019. He said funding secured by the Saudis, and 420. He said 420. It was just a joke. That's why I have 420 up there. But 420 is the all-time high, right? The all-time high is like 415, 417. I think we're headed for 420 for sure this year. Those are my thoughts. Very bullish technicals here, bouncing off that low. Now we're forming this falling wedge pattern, this falling flag, and I think we definitely go higher from here. Okay, so throw your questions in the comments if you have questions. Hold on, let me grab something real quick. I'll be right back. But this is the price action, right? If you want to look at the charts, they're on YouTube. If you're on YouTube, throw in your comments, your questions really quick. And hold on, give me a second. I'll be right back. All right. So yeah, we have anybody else doing energy storage. Okay, yeah, we got through those. So those are the technicals, man. Those are the technicals, big level at pretty much, I think it's 250, 260. You could call it 250, 260. But as long as we hold this level, the market is definitely going to go higher, right? That's all we got to do is hold that 260 level, get above 250, hold the 260, and we're going higher. But it's not just based off that, right? The overall macro, earnings are what rule the market. It is earnings per share and income margins, all that stuff. And we're starting to see analysts revise higher. They're revising the earnings of the overall market higher. Tesla's a beta stock, meaning it's going to move faster than the overall market. NASDAQ is set to move higher. Yes, rates are elevated, but the Fed is near the end of their pause, right? Investors are getting a little more optimistic, although there's still a lot of cash on the sideline, right? Yes, oil breaking out is the biggest negative. The dollar breaking out is a big negative, but long-term bond yields, which are the cost of capital for the market, look like they peaked out, right? Especially if the consumer starts to slow in the second half of the year, those will peak out. Now the stocks, yes, the consumer slows down, but government spending, this is the big catalyst that keeps us going. We saw that, right? Not full self-driving, but the tax credit, right? The tax credit is going to bring in demand automatically for new car buyers because car prices are already so elevated. So Tesla's prices are falling while other car prices are actually going higher. So this is extreme divergence on the fundamental side. I think there's a lot of divergence here. You're aligning the technicals. The technicals are back in a bull market. We're trending higher. The macro is starting to ramp itself up. You're seeing the dollar at resistance. You're getting bond yields at resistance, right? The VIX is nowhere. There's no volatility in the market right now. Volatility is coming back down. Triple B spreads, which is equity risk, is also down. Triple B spreads are rolling over. And when you look at the bond volatility, that's also rolling over. So banks are becoming more confident, right? The collateral is not at risk the way it was in prior cycles or in the previous couple of weeks. If you look at the put to call ratios, right, that's also trending lower, which usually marks a bottom in the market for the next cycle, right? For the next price action cycle. So there is more confidence coming into the market. And, Tesla is just one of those stocks that goes berserk when it moves. It moves from the last low. It moved up almost 100%, right? And so if we go to the from the very, very bottom, obviously nobody's gonna catch the bottom, but it went up 112%. The next bottom, it went up 95%. And we're not shooting this from blanks. We're looking at the fundamentals, the technicals, the macro. So let's say we go conservative and we go up like 80%, right? Which is less than the previous two. We're looking at 383, 375. But for me, when I look at that level, which would be the next resistance, you also have a lot of shorts and a lot of FOMO in this stock. So maybe we make a new low. Either way, it's very unlikely that the overall market just starts to roll over because earnings are starting to be revised higher. And that's what stocks like to see. There's no volatility. Like I said, there's cash coming in the system. And everyone knows in the fourth quarter, you have the Inflation Reduction Act starting to come online. You have the CHIPS Act starting to fuel the market also. And it's really the inflation backdrop that needs to happen. So the biggest risks in the market as we finish up here, the biggest risks to the market are going to be, and this is NASDAQ, maybe we move sideways for a while. The biggest risks to the market are literally going to be oil prices. Oil prices did get above the 83.50 level. This was a large level last 9 months. It looks very bullish, but also keep in mind, this can also elevate S&P earnings on the energy side. So it's not like so negative. The only thing that's negative about it is that it also keeps CPI headline higher because energy prices are higher, and oil is going to be an input to a lot of other items, whether they're goods or services. Oil is still an input. Therefore, inflation stays higher for longer. Therefore, the Fed doesn't cut anytime soon. They're going to have to hold rates a little longer, right? But that's if oil keeps going higher. If this is it, if it rolls over, boom, you're back into very bullish macro where inflation, okay, it peaked its head a little bit. Now it's going back down, right? On the shelter side, on the core of inflation, what the Fed talks about, core inflation has been making its way lower. Core inflation is showing a lot of progress. And if that is the case, then the Fed does pause, but you are going to, and then we're also headed into what? We're headed into an election year where typically politicians do what? They print money for voters, right? They give free money, whether it's policy, fiscal policy for infrastructure, whatever it is. They forgive student loans, whatever it is. And I expect the government to do the same thing, right? And that's typically the case. And man, the whole world is starting to turn in their policy, right? The central banks of the world are starting to turn in their policy, and that's going to benefit Tesla's business model. And that's all I have. If you guys have any more questions, let me know. Also, the price of oil going up, what does that do? That, people see higher gas prices. Any thoughts on real estate? Yeah, I think real estate goes lower over time. Tesla's going down big. Yeah. I don't think so. But oh man, what was I gonna say? Energy price, not energy price. Oh yeah. So as long as oil goes up too, that also psychologically, you see the prices of a Tesla go lower. Okay, so your price to buy it is lower. And also the price to own an electric vehicle. I'm sorry, an OEM, an ICE vehicle or a gas vehicle is going up. The prices to run it go up. The price of the cars go up while Tesla's declining. Demand is going to flood into the electrical vehicle market, and Tesla is set far above the rest. Model Y is already the best selling car. Okay, Model Y is the best selling car in the world. We know the transition is happening. We know they have good margins. We know the revenue is starting to ramp up. We know the Cybertruck is coming online. We know full self-driving is around the corner. Everybody's accumulating or switching to the Tesla standard, right? The NAC standard for charging stations in general. And the energy storage business is building. There's just no argument against it. This is the best stock in the market, in my opinion. By far, it's bar none. It'll surpass Apple at some point. If they continue to execute here, it will pass Apple as far as market cap. The only big mega cap that I think can outperform Tesla is not even a mega cap. It's probably going to be Bitcoin with the Bitcoin ETF, but that is a different, that's going to be a totally different video here, which we are going to do. I believe next Monday we'll probably do it, or maybe at the end of the week. It'll be all the catalysts going forward for Bitcoin and Ethereum and crypto in general, right? We're doing Tesla catalyst today, and next Monday we will do probably next Monday, or I'll let you guys know, we'll be doing the crypto catalysts. I think those are the biggest narratives here that we're seeing here. Blockchain, tokenization of the world. The central banks, the global financial systems are talking about tokenizing the world. It's coming to fruition, and the business cycle is turning up, right? We're getting close to the Fed having to print more money again, having to revamp the cycle. And who goes up the most? Risk assets. So that's all I have for you guys. Tesla to 1,000 SPY. Let's go. Yeah, 100%. You guys stay blessed. I appreciate the taking your time to watch the video. Don't forget to like, subscribe if you haven't already. Got a free newsletter. Check out the newsletter. I'll actually send these charts out in the newsletter today if you want to check that out. But yeah, go check that out. Appreciate you guys, and stay blessed. I'll catch you tomorrow for another market review. We'll see. There's not a whole lot of data this week, but I'll catch you up to date with the best market news, putting together the fundamentals, the macro. Yes, tomorrow at 2:45 Eastern time. Today I was a little late because I did a podcast this morning, and I'll have, I think, well, I don't have that out. It was on somebody else's, but that podcast will come out pretty soon. Glenn Stevens, what up? What up, Glenn Stevens? I don't think I've seen you before, but nice to meet you, man. Yeah, so we'll have some more macro for you guys tomorrow. Again, I cover, if you're new here, I cover the macroeconomics, okay, the technicals in the market, technical analysis, and the fundamentals, the overall fundamentals of the overall market. And right now, they are all starting to improve. The macro forces are at a edge point, but I'd argue this market is going to all-time highs on the Qs, on the S&P 500. And hey, if I'm wrong, call me out. But I'll catch you guys tomorrow, 2:45 Eastern time. I will be live. All right. You guys stay blessed. Get your workout on. Stay healthy. Stay hard. Improve every day. Keep your strong mindset. And overall, stay blessed. Catch you guys later. Thank you. Big man's coming. 100%. All right, guys. Take it easy. Catch you later.